Welcome, everyone. We are here. I'm going to let you know right now, I haven't been more excited about something in a long time. If you don't know what this is the AIME Community Pulse. We're going to be doing this once a quarter. I'm telling you, like this is great because we are putting out all the stops in this one. This is like almost like Fuse wrapped up, and we're going to do it quarterly, even though Fuse is going to be always better than all this stuff. But at the same time, this community pulse that we're going to do quarterly is amazing. My name is Marc Summers. I'm the founding director of AIME, and with me, of course, is our newly beloved chairman and CEO of AIME, Jonathon Haddad. John, thanks for being with us today.
Hey, thank you, Marc. I always love the energy and the heat you're bringing.
There's a lot to bring here. Now, we are in a tight schedule here. I mean, we have a lot of content, so I could go on and on about all this stuff, but all of these segments have been thoroughly thought out. They're great. This is stuff that's going to truly help the community, close more business, get more loan officers, do everything that we were set out to do. So I'm going to announce some guests here. So I'm going to tease a few people, but obviously we got John. John's going to give us some announcements. I'm also going to give us some announcements here. But then we also have someone, our new board member, Julie Yarbrough. She's going to be chiming in. She's awesome. If you've never met Julie, you got to meet her, okay? Another person that's going to talk to us about how to handle toxic relationships, referral partners, and even more. He's one of the most active people on Facebook. I still don't know how he's able to do this on Facebook as much as he does, but it's Amir Syed. And then another person that we're going to have is one of our beloved people. Listen, every time we've had him do one of our shows, he gets a great crowd. He brings that energy. But our beloved Barry Habib, he's there. He's going to be amazing. And to kind of wrap it all up, I mean, when we said we're bringing in heavy hitters, we brought in another heavy hitter. You don't want to miss this update from UWM's president and CEO, the one and only Mat Ishbia. So I'm going to ask you guys to do me a favor as we hop into this, and I throw it over to John. But listen, this Facebook Live is on different platforms. It's on Brokers Are Better. It's also in our AIM Facebook group page. Do me a favor, drop questions in that chat. We're going to do our best to answer them at the end of this live with me and Jonathon. Listen, I could go on and on about this stuff. I'm so excited. I'm so excited just to hear everything that's going to happen because at the end of the day, I'm still a broker. And that's what this is about. You know what I mean? And it's about helping the broker community. And I'm going to pass it over to John right now because like we said, we are on a tight time constraint, but John's got some updates for you. Take it away, John.
Yeah, before I jump in, I'll be very quick on this. One of the visions that we talked about when entering this new journey was making this into like a streaming platform, right? Opportunities for us to grow and learn from each other. We want to do it live. And the biggest reason why is, look, I'm still originating. I'm still in the trenches. I'm still doing pre-approvals. We have so much content of filming of doing pre-approvals live, denying out clients, even though that sucks, right? And so this is the direction we want to head in. And so bringing these people is something we want to focus on every single quarter. We want to give you nuggets. We don't want to overwhelm you with all this information, but if we can give you nuggets from the top people in our industry, in our space, you can always take at least one thing away. So be prepared to see so much more when it comes to a content standpoint, especially the live streaming. 2 updates for you guys. First one, Fuse. So we updated our pricing on this. We had an incredible lift when it comes to registrations, when it comes to all the different people signing up. We're getting a lot of traction on Fuse. Just remember, the pricing is going to continue to increase. And because I know it's a bunch of mortgage brokers out there, I do it myself. Procrastination seems to be a trait many of us carry all together here. So don't procrastinate. Get your tickets. Don't wait for the last minute. Don't wait to book your flights. Make it happen. It's going to be a huge event. We have so many more guests that we're excited to announce for you, but we're really bringing the heat. We're here for the mortgage broker, for the originator to help you close more loans. That is the goal for us. Next piece of it on our end here, National Mortgage Broker Day is just around the corner. We want to make sure you guys are excited and you're ready. AIME will be on the road. We're coming to you into your city, going from Anaheim back to Michigan, back to Tampa. Please, if you're around, sign up. We'd love to have you there. We'd love to take care of you. Maybe a couple drinks, maybe a couple shots. Depends on how you're feeling when you join us there, but we'd love to see you. I will be there every step of the way, ready to connect, take pictures. And overall, maybe you got a loan scenario that you need some help with. I'll be there to help you put out that fire as well. We've been doing a lot of that, and that takes me right back to Marc to talk about some of our member benefits.
Yeah, so member benefits. Listen, membership is imperative to any association. We feel that we're continuing to not only grow our membership, but grow the benefits that we have with it. And there's a few things I want to talk about. Number one is, we used to do it as it was a yearly, annual fee. You have monthly payment plans. And the ones I'm pushing really hard right now, because I truly feel they have the most benefits, is the Elite and VIP. So if you have questions on that, you can ask any one of our teammates. We can put you on a monthly plan. We can put you on a quarterly plan. But there's basically two big benefits that I want to talk about that every time I have these conversations with people, they go, oh, I didn't know that. Number one, if you're an Elite or VIP, and I'm going to give a huge shout out to Advantage Credit on this one. If you're an Elite or VIP, you get your 7-hour federal continuing education for free. Yes, I said it. It's for free. So why not? We all have to do it, right? And then every time we pull out our credit card to pay that continuing education, we all go, this is stupid. Listen, it's part of your membership now. Let's go through it. The other big one, and this has really spiked lately, which is escalations. Okay. So loan escalations is a beautiful thing that we do. And sometimes we get a little pushback on this, but at the end of the day, it's this. You have this association in your corner fighting for you. Okay. So if they're an approved lender, approved vendor, obviously we're dealing with lenders. And most people right now, let's just be honest here, there's no really cookie cutter deals out there right now. Okay. Yes, you may have a purchase that's just cookie cutter, but there's still some refis out there going on. There's still some cash outs. Listen, you have this escalation that's there for you. How you do this is you log into your portal. If you have an issue, give us some information. It's going to be the loan number. It's going to be who you are. It's going to be all this information that we need. The AIME team itself, it comes across my desk, comes across a few other people's desks too. We verify it and we send it off. Now, what happens here is it goes to that lender's management team. So now it actually kind of skips over, and it's like a fresh set of eyes is the best way I can say that. So it could be a condition waived. It could be an exception. It could be, hey, we're going to bend a little bit on this one because we kind of see where you're going with it. But at the end of the day, to kind of give you some stats here, we've saved millions of dollars in origination and literally a success rate of over 90%. And those are true stats right there. So why not have that in your back pocket? Not to take away from any of our lenders, because a lot of people, we have to understand that these underwriters and these processors, all they're doing is they're being good employees and they're trying to protect businesses. But really, if you have an issue, you fill out this escalation, we take it, and listen, you have this whole association behind you, behind your back going. To kind of give you some ideas of what's going on here, the average loan size is approximately $400,000. The average comp size is approximately 2%. We can go up or down on that depending on your area. That's $8,000 that you're leaving on the table. And you can actually go to our Facebook post and people will post, hey, AIME saved me X amount of dollars. I've seen them $5,000. I've seen them $8,000. I've seen them higher than $10,000 where we save it. And now some of our members will say, I will always have a membership because of that escalation process. It's just a set. It's an extra set of hands, more hands than you can imagine, fighting for you so you can get more deals closed. Those are my two big ones, John. Like I said, I can go on and on about this stuff all day long because we're passionate about this, and our goal is to help people close more loans. And I think we're doing a better job ever than what we've done right now of it. So, John, I'm passing it back to you because we have a lot of updates.
Yes, sir. And the biggest thing, y'all, with the escalations, I've spent 11 years doing this, very focused on the origination side. I come from the retail space, have led teams that have done billions of dollars a year in business. I mean, I've been a part of over 1,000 streamlines, FHA, VA, respectively. The biggest thing that we're seeing with these escalations is the biggest way that we help, I should say, is look, I know how emotional it gets as somebody that's still originating. Like, I get it. It can be frustrating, especially if you can't seem to figure out where the disconnect is from a communication standpoint. All we're doing is we're that unbiased advice to that potential underwriter or that team lead. And look, you guys know we all do the same thing. How much easier is it for you to give somebody else advice about their loan than it is about your own personal loan? I totally get it. I do it all the time, but please keep leveraging it. You're seeing all the comments, all the people coming in, and we're going to continue to really push that. That's a massive, massive value add. Bring them on, whether it's a fire or not, bring it on over to us. We're very excited to help you. We're all over it. Doesn't matter the time, doesn't matter the day. You've been seeing how often we're posting. Couple updates for you. Now, transparency. You guys were all asking for it as I embarked on this new journey here. So Tommy will bring it up to the front of the screen here. We have launched the bylaws. The new updated bylaws are live and public for you to see. You can find them very easy in the About Me section on our AIME website, and you can pull them up alongside of our member or our meeting minutes, I should say, the minutes that we're having with the board. So you asked, we delivered in a very short period of time. I just wanted to make sure that you guys knew where it was at and had access to it. Take a look, have some fun. I'm sure, like always, we'll have people that want to critique. That's okay. It's not about that. It's about the betterment of the community and what we believe, alongside with your board, what's going to be best for all of us as a whole. That's going to be a big win. Now, supporting our group, supporting AIME and what we're trying to continue to build and create and propel forward. You can do this in a multitude of ways. One of the biggest things that we've brought to this here is revenue share opportunities when it comes to our vendors. We are finding so many wins with this. It's unbelievable. And we're excited to bring many more vendors. But these vendors are vetted by us, by your board, by others within the community to make sure that they are the right fit for the community. It's vetted by originators for originators. That is the goal. That is the focus. And so when you sign up with them, you're also supporting us. So there's multiple ways to support us. Number one, through the vendor memberships that we just talked about. Number two, through your own personal signups and memberships. We want to bring more value and more opportunities. The more members that we have coming in from starter to premium, premium to elite, and elite to VIP is going to do nothing but help propel us forward in the right direction to continue to provide you more value. And the last one's obviously Fuse tickets. Keep them coming in hot. They give us additional opportunities for us to continue to grow and for us to continue to scale. Plus, tell your friends about it. This is the first time that we have done this live, not just from our Facebook group, the private one, but we're also live publicly on our AIME Facebook as well. So this is a big deal. We want to showcase to real estate agents, to consumers publicly, that mortgage brokers are the place to be. And AIME is here to help you every step of the way. We're here to help you close more loans. More importantly, we're here to showcase to consumers that we are the best fit. No matter how you look at it, the data indicates that. And we just talked about growth. Now, we are very fortunate to have recently appointed the new director of growth, Julie Yarbrough. This human being is absolutely incredible. She has become a very good friend of mine. She's the type of human being that checks you when you need to be checked. She's the type of human being that sometimes doesn't have a filter. And I can only imagine her smiling right now behind the scenes before we bring her up here front and circle. But she has extensive play here in the retail space. And she's taken that experience and she's now dominating in the broker space as well. This is a good human being that's going to help us grow when it comes to our memberships and to get us in the right direction. Her ear is going to be to the ground, talking to all of you, connecting with all of you, maybe taking a couple shots of tequila. Sorry, Julie, to get even closer and closer so we know what to continue to help you with. Without further ado, I'd like to bring up Julie Yarbrough. Appreciate you so much.
Well, hello. What a great introduction. Tequila. You didn't say cursing, but you said direct. I am very direct. Hello, I'm Julie Yarbrough. For those of you who don't know me, let me give you a little bit of my background. First and foremost, I'm beyond humble and grateful for the opportunity to serve. I want to start with that. It's in my blood. It's in my heart. It's in my soul. And I want to do it honorably, ethically, with integrity. And you can rely on me to do that. You can rely on me not to have favorites, to be direct and to tell you my opinion, whether I agree or not. So I think I'm the right woman for the job. I'd like to announce that I am a woman for all of you men on the board and all of you men out there. So for all the ladies, I'd like to start with this. You have a seat at the table with me, okay? And we don't need to knock anybody over to get there. We just, make a little room for you. There's enough room for all of us. So I want to say that. And I will be listening for what everybody needs at all levels of membership and in all channels, okay? So with that being said, I'm Julie Yarbrough. I've got about 33 years of experience, and I started out at 18 years old at Home Savings of America as a loan processor. I failed miserably there because I wasn't great with paperwork. I learned that really fast, and then I kept seeing these beautiful people walk into the bank all the time, and they had nice cars, and they just did fancy stuff, and I kept going, what were they doing? And it turned out they were loan officers. That was not my next adventure. My next adventure was becoming an escrow officer, where I was the cat that got kicked at the end of the transaction. I didn't like that too much, but I was pretty good at it. I was pretty good with dealing with realtors and loan officers alike. So I joined a title company and became an escrow officer for quite a while. And I kept printing checks all the time. And I kept going, what do these people do? And it turned back to loan officers again. I thought, they make quite a bit of money. I should look into that. And somebody gave me a shot back in my early 20s at becoming a wholesale rep. So then I went to become a wholesale rep, and I did subprime lending. For those of you who've been around for a while, this is the mid 90s, and I grew into that role. And I started my own desk as a loan officer in 1999. I'll be 54 in a couple months, so it gives you a little bit of age range right there. In my heyday, I did about 50 to 60 loans a month. I held that standard for about 6 to 7 years. That was until I got until I broke. But I had about 5 assistants, built a beautiful team, and so I knew how to leverage loan officering. And I opened a brokerage, and I grew it to about 78 people, and I lived through the meltdown, and I survived. I lost about $1 million cash. I got pregnant through the meltdown. I failed miserably, but I failed forward and honorably, and I learned that I had integrity, and I paid all the people that I owed money to. And I just did things the right way. When I look back, I went, okay, I didn't run the business right, but I ran the people right. And so I know as I matured, I made better business decisions, and now I can do both right. And so from that experience, I went into retail because we all did, guys. If you're back pre-meltdown days and you went through the meltdown, a lot of us went into retail to survive. So I went into retail. I quickly moved up the chain and became the president of the mortgage division for a community bank. I went to an international bank, and then I ended up going to a retail mortgage lender where I sat on all your margins, and I ran many, many, many regions. And I was the puppeteer behind the scenes running rates until I went to bed at night thinking I do not provide enough value for this, and nor do any of my divisionals, nor do any of my branch managers or sales managers. How do I change that? I decided to start a company with 2 amazing men, Leo Witten and Anthony Lombardo. And we built a company around people, around a lower margin, around a better experience, right? And so I'm humbled and excited to do this role with AIME and to be with all of you. I understand both lenses, the retail lens and the broker lens. I understand what it takes to win. I understand what it takes to lose. And hopefully a lot of you have lost because I think we fail forward quicker. So just a little introduction on myself. You can rely on me to do the right thing when no one's looking all the time, and to, not say what needs to be said because it's a popular thing to say. So again, I'm Julie Yarbrough. I'm humbled to be here. I'm excited to meet y'all. I hope you're all at Fuse. I'm going to meet y'all at Fuse. I want to get to know you and learn how I can advocate for each and every one of you. Thank you for this opportunity.
Thank you, Julie. You are such a legend. I appreciate you. Thank you for being real. Thank you for bringing the energy. Thank you for bringing everything I already knew you were going to bring to the table. We are honestly we've been growing a great relationship. I'll tell a quick fun story. Julie and I were talking not too long ago, and Julie, I'm sorry, I'm just going to tell him. She hit me up. She was chilling. She's like, yeah, I'm just having a couple drinks. And, we knew we were going down this path. So I said, let me FaceTime you real quick. Mind you, I live in Michigan. She lives out west. So I FaceTimed her, and I poured a shot of tequila at my house, and we took that shot together via FaceTime. So that's the type of human being she is. She's all about it. She's all about winning. She's all about staying forward and truly just staying focused on a winning mentality. That is what she is about. And I'm excited to continue to bring that to the table. So thank you, Julie, very, very much. Look forward to getting to everybody get to know you more. Take care.
Take care.
All right. Up next here, we got somebody who I've been personally you know what? We'll just call it. I've been stalking all his stuff. Okay. I've been stalking his content. I've been really reaching out to him multiple times. I think I scared him a little when I reached out to him the first couple times because, I come in with a lot of energy, and that's just how I've been since I was young. And sometimes that throws people off, but all jokes aside, this guy was not thrown off. He was absolutely open arms the whole time. He was very, very excited. And we're bringing him here to deliver some coaching to you guys, tangible items, things that you can use into your business and leverage right away. I'd like to bring to the table here Amir Syed, CEO of Go Coaching, CGO of Lower.com, and founder friend, I believe, of At First Home IQ. So please, Amir, if you can bring him on up here. I'm super excited to have him here today and talk to all of you. So Amir, how you doing, sir? Oh, are you there? Amir? Can you hear us? Uh-oh. We're losing him for a second. So while we work on that behind the scenes, I'll tell you what we're about to talk about here. So the biggest focus that we're going to have is toxic relationships. I just had a team, or my team that I should say, we've parted ways with some of our real estate agents. And when you're a new loan officer, that can be pretty difficult to do that because you don't want to lose that relationship. And I put quotations marks on there. So we have to learn and understand how to navigate and have those conversations and understand those expectations with your agents and how you actually set them when you're going through everything. So Amir has a step-by-step play on how to deliver all of this news to your agents. So he's just jumping back on here, but that's going to be the focus of what Amir is going to talk about. And moving forward, this is what we're going to be delivering every single quarter. We're going to deliver you a board member. We're going to deliver you a coach from our industry, right? And you can see where we're pulling all of these from. It's not just from our environment, it's everywhere. The coaching platform is going to be huge. From there, we're always going to bring to you a market update of some kind. Obviously, we'd love to have Barry Habib every single time, but the man is on a very tight schedule. We're going to bring you that value consistently. And lastly, but not least, we're going to bring you a lender update from the biggest lenders that we possibly have. UWM here being the biggest lender in the country right now. So we're very fortunate to have Matt be joining us today here as well. So he's trying to jump back in here. We might have a quick shift in dynamic while we jump on. So what I'm going to do is shift to Barry Habib and bring you a potential market update if he's ready on his end there. Tommy, if we could bring Barry Habib up real quick, if he's available on his end there below.
Of course, I'm ready.
So Barry, thank you, sir. That's how you transition. That's what happens when you go live sometimes. The good news is we're quick. We're ready to go. That's how you should be as a mortgage broker. It's very fast on the fly. Don't let anything bother you because at the end of the day, it doesn't matter. It's all about thinking quick on your feet. And here I am, lucky and fortunate to bring somebody that I've been fortunate to start building a relationship with, a very determined human being, somebody that focuses on the positive, somebody that delivers you facts with real data and is constantly focusing on helping our channel grow. Barry, how are you doing today, sir?
I'm doing good, my friend. It's really great to see. But wow, Julie, what an impressive introduction that was. She's awesome. She's going to be so strong for you. Marc, my dear friend, good to have you here. And Jonathon, I continue to be impressed with you every single time. Listen, team, you could not have a better leader than Jonathon. He is just the real deal. He's incredible. So, yeah, let's talk a little bit. I've got a little bit to talk about the market, what's going on. It's kind of an optimistic viewpoint because I think there's good things happening. And in addition to that, what to do right now. So I've got some slides, so maybe we'll try and go through real quick. All right. So, team, here we go. We want to take a look at the Fed, interest rates, and we've got to overcome some adversity. Me personally, I'm overcoming some adversities right now from a health standpoint. So we're all in the fight together. I want to tell you where we stand here. In 2023, we have the best data out there. We measure by transactions, not by license, because that can be misleading. How many LOs out there? So 233,000 in 2023. How many are still around defined by you did a closed loan in the last 90 days? There's 151,000. So we lost 35% of them. How do you stack up? So the latest numbers as of the end of May. So there's 151,000 LOs in the business that are active. So you got roughly 75,000 above or 75,000 below the middle line. So the 50th percentile, they did $4.4 million in the last 12 months. And if you do it by unit, it was about 15 loans. If you want to be in the top 25% today, $10.4 million. This is a shocker for me. Jonathon, when I originated loans, and I did it for a long time, like the standard that somebody was decent was they did $1 million a month. Today, if you do $1 million a month, you're probably the top 20%. So just to think about the adversity that's out there right now. And if you want to be in the top 10%, $20 million in the last 12 months, top 5%, a little under 30 million. And the top 1%, if you're doing $5 million a month, congrats, you're in the top 1% out there. There's a lot of business out there, team, still. So, and there's going to be more. Right now, 398,000 real estate transactions, that's going to rise. And when you take a look at how many of them need a mortgage, 286,000 of them, because 72% need a mortgage. And there's still a lot of refinances. So please don't count them out. Cash out refinances. People want to get rid of MI. Term reduction refinances, they're out there. So you got 440,000 transactions each month that we could do business with. So that's pretty good. So what's going on? Let's talk about inflation because we all want to know where rates are headed. That's going to be a driver. And you know what? I'm just going to talk to you just for a quick second here because, listen, team, Lennar gave their report just recently. Their sales are up 19%. One of the things they're doing is they're doing some buy downs. They're incenting people with a lower rate. So here's the bottom line. If rates are lower, they will come. So that's what we have to think about. So there's good news on the horizon. There's business behind us. But why can't we take the same strategy like Lennar? Maybe it's not as easy, but people have equity. Why not ask them to do a little bit of a buy down? or cause a lower interest rate for their buyers, because that will attract some volume. So I want you to just think about these strategies. If it's working for the top builders in the country and they're killing it, why can't we take the same strategies and do the same things? Okay, so let's go back to sharing here. I'm going to go back. I should have just asked you to take me down, so forgive me. I should have done that. Next time I will do that with you, brother. So we're going to do a talk about inflation. So, and I guess you guys can see my screen, right? Okay. So inflation, listen, this has been pesky, right? Inflation has come down. You know, we forecasted inflation was going to come down. It came down. Unfortunately, initially rates didn't follow suit because of all the debt that was issued, but things are changing now. That kind of problem has been resolved a little bit. When you take a look at inflation, when it was 9%, it's come way down, but it's not where the Fed wants it. But where has inflation come down? You see this gray area? This is kind of like everything in inflation, except for two things: motor vehicle insurance in blue and rents. This is shelter costs. As you can see, these have been stubborn and they come down slowly. We just got news today from CoreLogic. Rents are going up at 3%, but in the CPI, it says it's 5.3. It's just going to take time. It'll get there. The BLS is very unreliable in their data. Motor vehicle insurance, it's finally, as of last month, starting to come down. It's been going up at about 23% per year. You know, you have a lot of car thefts, you have a lot of technology in bumpers, and auto prices were going up. But now, because auto prices have stopped moving up and have actually started going down, that shows that the consumer is getting slower and weaker. This is telling us that you will start to see these inflation readings come down. So there's good news there. Now, we look at what the Fed's going to do because it's very important. As the Fed cuts rates, that'll help us. It'll cause a lot of good for us in our industry. So they look at inflation and they want core personal consumption expenditure, PCE, to be confidently moving towards 2%. Well, right now it's 2.8%. I took out a couple of decimals here, but they round this to 2.8. So I want to take you behind the scenes. This is how you forecast it, because here's what's going to happen. Your customer's going to say, well, what should I do? Are rates coming down? Are rates going up? Where are they headed? Now, you could answer the question and say, man, I'd be on a beach somewhere if I knew the answer to that. Or you could try and at least frame it for them so they know what to look for and beat your competition, look a lot smarter. So here's the deal. Core PCE is what the Fed wants to go to 2%, and then they'll start cutting rates. It doesn't have to quite get there, but this is the key. Now, how do we forecast it? The 2.75% that you're looking at here is made up of the previous 12 months individual monthly reports. The next report we're going to get is going to be June 28th, and that's for the month of May 2024. So when we get May 2024, we lose May of 2023. The reading for May of 2023 was 0.288. So that goes away. What replaces it are estimates right now. Our best estimate, and what we're looking at here from others, is going to be an estimate of 0.1%. That means that if we looked at what we think core PCE will be in May, for the May reading, which comes out June 28th, we think it's going to be 2.566. That means we'll see current PCE go from, let's call it, the media calls this 2.8 to like 2.6 or 2.5. I think that June 28th, the market should like that. That should be a good day in the market. So while there are other factors that can happen, certainly, it appears to me that as we approach June 28th, this is probably a good time for the markets to see a rally, to see lower rates, and it's good advice to give your customer. This is what we have to look at. Now, what about going forward? What about into the future? Well, using the same way we forecasted, right? We know what the forecast was for May, and then this is the outgoing number. So if you take the total level of core PCE of 2.566, that's what the Fed's going to be looking at. Now, they'll get another number before the June 31st meeting, and that will be the July 31st meeting, rather, and that'll be their June PCE. Well, when they get that in July, what that will probably show us will be close to the same. So not a lot of progress. In fact, not a lot of progress at all through the rest of the year. Why? And it was funny to see the Fed statement, and Steve Leisman from CNBC, he didn't even understand it. So as I explain this to you, even people in the media, even people at the Fed, they don't understand how this works. Jerome Powell actually took him to school right on the air, and he explained that it was because of these low outgoing numbers. You see, the 2023 numbers were very low at this time. Remember, we had forecast that inflation was going to come down. Unfortunately, all the debt didn't help us. But when we see this come down, the new numbers could actually push inflation higher. So does that mean the Fed's not going to cut? a lot of people are saying the Fed's not going to cut because of inflation. But let's remember the Fed has two mandates. The other one is employment, the job numbers. And you know what? The BLS, the Bureau of Labor Statistics, they've been very unreliable. The job numbers have been very overstated. And if you follow what we've been showing, you see why. And finally, other people are finally starting to come on and talk about the exact same things we've been teaching you guys forever in all of the webinars we've done for you and on MBS Highway. Let's talk about the Fed. Powell said he acknowledges the policy is restrictive. What's that mean? Code word for the next move is a cut. Restrictive means we're tightening the economy, we risk a recession. The unemployment rate now has crept up from 3.4 to 4%. That's worrisome. Every time that has happened, we've had a recession. Every single time you get a 0.5% above the cycle low, you get a recession. Every single time in our history. Now, Powell said that 4% is still kind of historically low. There's something called the quit rate. This is where people say, hey, man, I can get a job anywhere, or I'm being poached by other companies. I'm getting better offers. That quit rate is lower. It shows the economy, the job market is weakening. Job openings are lower. But Jerome Powell doesn't understand this fully. He said, yeah, but job openings, 8 million. They've got about 5 or 6 million unemployed. It's still more than the unemployed. What he fails to understand is that since the pandemic, we now have work from anywhere. So the way that the job openings are determined is a report called the Job Openings and Labor Turnover, known as the JOLTS. This is reported state by state individually. So think about it. If you have a job opening and it's work from anywhere, you could put it in 10 states. So you are overstating that number. He just doesn't understand that yet. Our wage increases are slower. And there's two surveys when we get the job report, the business survey and the household survey. Boy, oh boy, there is a huge overstatement. Look, when you look at the job numbers, it showed we had 272,000 jobs. But a lot of that comes from something called the birth-death ratio. The birth-death ratio tries to capture how many small businesses died or how many small businesses were born and then assigns a number to it. But it's very unreliable. Now, ADP looks at small businesses, and they said in the same last month survey, we lost 10,000 jobs, didn't gain 231. And we're seeing this in constant revisions. Now, there's a household survey where they actually call people. We didn't gain 270,000 jobs. We lost 408,000 jobs. The unemployment rates moved up. And if you take people that are like discouraged workers, our real unemployment rate is 7.4%. And look at the type of jobs we're losing. We're losing full-time jobs and we're replacing them with part-time jobs. All this points to a weaker labor market. These numbers are going to come out, team. If we're not going to head into a recession, we're going to be having the Fed have to cut rates. Now, let's see what the Fed thinks. They tell us. The Fed's asked, what do you think the unemployment rate would be? There's 19 Fed members. 2 said, we think the unemployment rate would be 3.8, 3.9. 14 Fed members say 4 to 4.1. We're already at 4%. If we get to 4.2%, the Fed's going to be in a position where they're going to have to cut. And I think we get there. The Fed's going to cut more aggressively and more frequently than people are thinking right now. In fact, the Congressional Budget Office, they're pretty smart. They see 4.4% unemployment. So I think you're going to see a Fed shift. They're talking a tough game, but don't believe it. They're going to shift. Now, my dear friend David Rosenberg, one of the country's top economists, he said this today, and I think it's very important. I want you to understand it because we really, team, you have to be an expert in your craft. Okay, we know with AI, we know with automation, we can't just take a mortgage out. Okay, everybody is smart today. They want to know what's happening in the marketplace. You have to be that guiding light, and you have to understand this stuff, and you have to be smarter than your competition. So please follow me here. Obviously, as I mentioned, there's a growing divergence between the employment estimates out of the payrolls and the QCEW. That is the quarterly census of employment and wages. Remember that. Quarterly census of employment and wages. These are the real numbers. While the strong headlines in the payroll numbers, that's the job number you get every month, are what occupy the minds of investors and the Fed, it's important to take a step back and look at the big picture. The whole point of those monthly jobs report is to give you a timely estimate, just like a snapshot of what the real numbers that the QCEW provide, because that's the real and final employment reading. It covers 12 million establishments compared to 700,000 in just that survey. Just show you real quick. The last number we had, there's a little background noise there. We had 637,000 jobs from the BLS, right? And then if you take a look what we had in the actual numbers, it showed October, November, and December. These were the numbers. But the revisions from the QCW said we didn't have in fourth quarter 637. We only had 116,000. These are the actual numbers. What would the bond market have done if we got, we didn't make 165,000 jobs. We lost 9,000. We only gained 8,000. We only gained 116,000. Bond prices would be a lot better. Rates would be a lot lower, and the Fed would be cutting. Look, help's on the way, team. We got treasuries. We're seeing it this month. The Fed's buying $35 billion in treasuries, and the Treasury's buying $9 billion. You're seeing supply. This is the opposite of what we saw happen last year when we all of a sudden had $2 trillion surprise that was coming to market. And we would be in a recession, except we're at emergency spending levels. We're spending 23% of GDP. When do we do that? During the great financial crisis, the Gulf War, the double dip recession. The consumer is getting tired. 90-day delinquencies in cars, 90-day delinquencies in credit cards, skyrocketing. Buy now, pay later, 43% delinquent. Team, 2 minutes here on coaching, and I'm out. The Rise of the Machines was a great movie with Schwarzenegger. August 17th is the most important thing you got to be thinking about is the rise of the listing agent. I know we've been all programmed to deal with buyer's agents, but the listing agent is what it's all about right now, team, because they're going to have control. Listen, when we talk about a listing agent strategy, this is very important for us because listing agents are going to have the keys. Remember, buyer's agents, could you pull me down just for a second? I want to talk to everybody just for a minute here. So buyer's agents, I want to tell you, every realtor that gets into the game becomes a buyer's agent first. 80% of your realtors are buyer's agents. Why? Because they start off with, my friend, my relative, my brother, they're buying a house. I'll be a realtor and make a commission. But up until now, it's been a pretty good deal because they've never had to negotiate. What did they always say? Oh, you don't have to pay me. It's free. The seller pays it. This is the first time as of August 17th, they're going to have to do that. They're inexperienced at this. Listing agents, which only represent 20%, it's going to be almost like buying a car. People are going to go into a realtor and say, what do you have in stock? What is your strategy for listing agents? Because you have to communicate with them. What you have to do is offer to go on listing appointments with them to show strength, give them a third-party endorsement, pre-qualify their buyers, overcome lock-in effect for their buyers, and heck, overcome lock-in effect for the potential home seller. Now, this is very important. Tim Brahim, my dear friend, he's brilliant. He thinks you should create a fused presentation. I love that he said fused. They infused. So here's what you want to understand. The previous script regarding getting paid for a realtor was, you don't have to worry about that. The seller pays me. You have to talk to your realtor and get religion with them. And you have to have a serious conversation with your buyer side agent before they go by the wayside. Because otherwise, buyer's agents are going to get wiped out, a lot of them. Here's what you have to say to them. What questions are you afraid of being asked by the buyer? Because they are. And they're going to start August 17th. Don't wait until then. Number two, what is the cost to work with you if I'm a buyer? Because you know what? Most people don't think they do a lot of work. On $1 million home, you're going to pay me $30,000 to show a home? They might not want to do that. So what's the cost to work with you if I'm a buyer? What if the seller isn't willing to pay a buyer fee? How are you willing to handle this? And then the public's perception, it's not my perception, is that you don't do very much. How are you lighting them on all that you do? So here's what you have to do. I'm your partner. I'm going to third-party endorse with you. I will come to that buyer presentation with you and explain all the things you do. You're the only one that represents the buyer. You're the only one that can negotiate the price for them. You dissect and negotiate the inspection, inform them on the schools. You're the quarterback, insurance, mortgage, utilities, movers. You're the one that has to do that, team. This is where it's at. I want to give Tim credit for that presentation. It's great. So the things you got to do, bring an AVM. Do all the things that you're supposed to be doing here. Do a real estate report card. Bring everything, buy versus rents, all of these things to the listing agent. Appreciation reports, you have to do it. Look, team, the seeds have been planted. Now's not the time to withdraw. You know, there's been 10 million loans done in the last 2 years. They're ripe for refinances. They're absolutely ripe. Get in touch with your customers right now, your past customers, and say, what is your strike price? That's what you have to tell them. What is your strike price? What does that mean? At what rate are we going to do a refinance? Because when it happens, you've been in refinance booms. When Fed starts cutting, rates start dropping, all hell cuts loose. And then what are you going to do? Your customer is going to fall by the wayside or somebody else is going to scoop them up. You don't want to have a conversation of if it makes sense at that point. You want to just say, hey, it's time to go. Let's get in before everybody else does. The time to do that is now. I've lived through so many of these in my origination career. I'm telling you, this is what has made me literally millions of dollars in commissions by doing it before it happens and getting strike prices with my clients. Now, look, you got to market to your current clients. If you don't market to them, statistics everywhere, Total Expert, Jungle, everybody says a 19% return. You may not think it's you, but that's the average. Somebody's going to be in the average there. If you market to them with shit, anything, 38% return to you. If you market to them with something good, 57% return to you. So listen, we've got this thing. It's the home report. It's special for you guys. It's a pre-release deal. It gives them values. It gives them MI opportunities to move up purchase ideas so you get purchase ideas so you can have referrals for your realtor, term reduction strategies. It keeps them engaged. There's great tools like that are out there for $200 a month. Great tools. We're going to go out at $169 a month, but we're going to do something special for you guys. The median loan production today, I gave you these numbers. But if you're an MBS Highway subscriber, you make about $46,000 more on average. If you're an MBS Highway list report, it's $60,000 more. The top 100 Scotsman guide, they're virtually all on board. There's a reason for it. Here's the prices. If you want to get on for home report, forget $169, $69 a month. If you want to get on. I know that there's other great services. They charge $200 a month. Bingo. If you're not on any of this stuff, email Jared at MBS Highway, and we are good to go. Jared at MBS Highway, and get the discount today.
Barry Habib, thank you so much, brother. For a guy going through what he's going through, to continue to bring the energy, you have no excuses. For those that are watching, the energy is all within. You got me fired up. You're delivering value, and you're talking about the data. That is what this is about. Leverage the data to your favor. That's what you owe to your clients, especially to your agents. They're nervous right now. Be that shining light, be that beacon of light, and be prepared for them. Thank you, Barry Habib, sir. I appreciate you more than you know. God bless you and your journey. Prayers for you and the family, man. That's all we got for you, sir, but I appreciate you, man. Look forward to getting to know you soon. All right, guys. So continuing to bring the content here, and we have a very, very special guest. Very excited to bring him to the forefront here and talking about mindset, talking about growth, talking about your past clients, talking about what you can do to scale your business as we prepare for these refi booms coming up. Without further ado, I'd like to welcome President and CEO of United Wholesale Mortgage, Mat Ishbia. Please and thank you, Tom, if you could bring him up here. Matt, how you doing, sir?
Hey, thanks for having me, Jonathon. Hope you're doing great.
Yes, sir. Always ready to go, ready to run. Got the nice little new setup over here just to make sure, look efficient
good
as we can. Thank you. Trying. The lights help a lot when it comes to, what's going on over here, making me look extra good. So I appreciate our camera guys behind the scene there. Matt, I don't want to take up much of your time here, sir. I know you got a lot going on, but I really want to dial into, first and foremost, the mindset piece. On the few occasions I've met you, one of the things I noticed right away is the fact that you focus on the positive. Even when you're dealing with potential BS or things in the background, you're able to compartmentalize and just focus on that winning mindset. Why is that so important, especially for originators that have stuck around? We saw the stat from Barry Habib, over 50% of the originators exited the space coming into 2024. So for the ones around here, why is that such an important piece?
Yeah, no, well, great question. And thanks for having me. Hopefully can bring some positivity, some energy to everyone here today. But Barry Habib was great. I got a chance to watch some of that, and just some great information and knowledge. Knowledge drives confidence. Confidence drives success. And so mindset's a big part of it. It's easy to get negative, easy to talk about what you don't have and what's struggling. And I see so many loan officers that I work with and we talk to that, get down about something. Oh, the Fed's going to lower rates or going to raise rates. It didn't happen yet. And there's so many great things. And so I think it's, first off, I deal with a lot of stuff, a lot of negativity, and you have to deal with it. We all have that. We have all things in our lives. Life's not perfect, but the mindset all starts with, I get to decide what I focus on and what I think about more and and how I'm going to react. Like, different things can happen. You can get in a car accident and you can say, oh my God, this is the worst thing that ever happened to me. I can't believe this BS, this driver ran into me. Or you can say, thank God I'm alive. I love these airbags. I'm so glad I bought this car. I'm the luckiest man alive that I can afford this car. Which one are you? Right? And so I seem to be to focus on the one that's the more positive, the one that's saying, I'm so lucky I have a great car that has airbags. And so think about your life and your business mentality. Like, we are in an amazing industry where we can make multiple six figures. We have an ability to help multiple consumers every single day. We can impact real estate agents. We know our business. We have opportunity with lenders. We are brokers, which means we are ahead of all the retail lenders. We have so many great things. And so, yes, we can talk about what we don't have, but I seem to focus on what I do have and how lucky I am to focus on the great things in front of me. So mindset is a big thing. If you don't have everything controlled up here, you can't win down here. And so the way I think about it is, first job of everyone is to dominate your mind, dominate your day, because your mind dictates 90% of your success or your failures. Your talent, your body does the last 10%. And so I think too many people think about what they don't have or the negative. I'm the most positive guy you'll meet. I'm always going to talk about the great things. People take shots at me, take negative things. Like someone asked me recently, what do you do when someone like, why you're where you're at? The UWM's up here, the Phoenix Suns, and people say negative things about you. What do you think about that? I think, man, I feel bad for those people that's what they think, that's what's in their mind. I reach out to someone and say, man, I'm sorry you're going through such a tough time and that you think so negatively. Well, let's talk about all the positive things going on. Like, think about the great things in life and the great opportunities we have. We are in an amazing industry. We got you leading AIME, Jonathon. That's a huge impact. That's a big positive thing. Hopefully you feel good about what UWM is doing, other lenders are doing, real estate agents, the market's starting to pick up. You just heard Barry talk. Like, how can you not be in an amazing mood is my perspective. And so that's how I think about it. I think you control up here and you'll win down here is how I think about it.
You're spot on. And no, UWM's been a huge proponent in the space. I was in the retail space early on, and I remember being in that space, and they would poke fun of you back in the day, and they would laugh and joke around. And, I was like, okay, then I got to know you more and more. And I'm like, gosh, this guy is literally focusing on the positive as we've entered our journey here with Next Door Lending, from our space. So I'm loving what I'm doing. I'm enjoying the positivity we're bringing. And for those listening, these are the culture killers. You've all been around culture killers at a certain job that you've been at, especially if you've been in the broker space for a while. These are the people that no matter what happens, they always think something is wrong. The reason their loan didn't go well is because it's them. Whatever happens, it's always somebody else's fault. That mentality is a mentality you have to get rid of, especially entering into the space that we're entering in. You need to be so dialed in up here in order for you to find wins and find success. Get rid of the negative attitude and surround yourself with winners. That's the best way to do it. You already know some winners. We all do. Get in touch with them, help them grow. So I really appreciate that big time. Now, talking about scale, as the number one lender in the country, you see a lot of data, I'm sure on a daily basis, if not a weekly basis. And a lot of the data is indicating that the refi boom is around the corner. What's your thought process on ensuring companies have, structure set up for processing, and how is that going to benefit them when it comes to scaling? How important is that?
Yeah, so we've been waiting for it, right? So we had a couple great years in 19 and 20 and 21. Obviously, even before that, there's some great years. If you take out 17 and 18, there's some really great years in there. But the truth is, the refis are coming. And not only are the refis coming, the purchases are coming back too, because as rates drop a little bit, just down to the 5.99 range, 6.25, 5.75, when that happens, inventory is going to open up. So purchases are going to be bigger. And all these refis, trillions of dollars that we've all been doing for the last 2.5 years are going to be refinanced. You have to be prepared to not only double, but potentially triple your business. And we've seen this before. The only time, and Jonathon, I know you lead AIME now, the only time that the mortgage brokers have lost market share in the last 15 years, 2020 and 21, the two biggest refi years. It's because we were not prepared. And I'll be a thumb pointer. UWM was not prepared well enough, right? We were because we didn't do a lot of work for brokers. And this time we are prepared. I'm prepared not only for UWM, which we are with over 8,000 people. I've hired over 2,000 people in the last 4 months, but also we're prepared for brokers. Brokers have to be ready. If you go from doing 4 loans a month to 6 in the refi boom, you failed. You go from doing 4 to maybe 8, I might say you failed. 4 to 10, 4 to 11, 4 to 12, that's ahead of you. And that opportunity, if you're doing 2 or 1, you should be going to 7 or 8. And so are you prepared? Are you prepared to do your role and then let your processor do their role and your lender do their role and the title, everyone do their role? And I guess what I would say for scale purposes is I'm doing everything. I promise you this, UWM will be prepared. And we are doing stuff to help brokers be prepared, helping with data, helping with information, helping with technology. But the thing is, you can't force someone to use it. So I can roll out the coolest technology. I got some cool AI stuff. I got more stuff coming. I got some the PA Plus where I can help process your loans. I got stuff where we can do the closing all the way through your loan. So you don't have to do anything. We got things you don't have to do. Title companies don't have to be involved. But if you don't try it and don't use it, you will not be able to succeed and scale. And I think that's the biggest, gray cloud elephant in the room right now, that people are, I'm just waiting for refi, but you are not doing what you're doing to be prepared. So what should loan officers do to be prepared? One, try new things. So first, try PA Plus if you work with UWM. Let us process your loan. Let me show you how to work it all the way through closing. Do Track Plus so you can see how this works without a title company, so you can do multiple loans and you don't have to think about it. Try that stuff. And then outside of UWM, what are you doing with your past clients? Are you calling your clients every loan that you did in 22, 23, and so far in 24 and touching base with them? Hey, Bill, it's Matt over at UWM, or Matt at Ishbia Mortgage, whatever company you are. I wanted to reach out to you. I know we did a loan last year at 7.25. Hopefully you and your wife are doing great. But by the way, they talking about the Fed might lower rates. I'm looking at your stuff. It doesn't make sense for you to do anything right now, but I'll be reaching out to you. And if you see anything or you have any questions, call me, because we're going to be able to save you some money real soon. Like that 30-second call, they'll call you. Like, are you prepared? And so scale is not just, can you handle more? It's, are you prepared to handle more? And are you doing the work right now? And I tell you, just like Barry talked about, we might not have much more time to prepare. You might only have a month or two, right? Like, are you doing everything? And so try new technology, be ready to scale, hire if you think you need to hire, but it might be too late to hire and train. So get yourself ready to be able to dominate your role and align on some of these things. And so I think right now is preparing for scale is the most important thing an originator can do right now, because you should be able to double, if not triple, your business in 3 months, 6 months, 9 months, whenever it really gets busy.
Yeah, that's unbelievable. And the biggest thing takeaway for me right now is the fact that United Wholesale Mortgage, as the #1 lender in the country, is still thumb pointing, right? And even you, even though you're at the top of that mountain right now when it comes to your business, you're still saying we weren't prepared. We didn't do a good enough job in 2020 and 2021. And that's the mindset that we have to continue to all get in, especially on the broker space. Doesn't matter how small or big your shop is. If you're not constantly willing to take some risk, willing to add more people when it comes to the processing journey, trying the new technology, right now is the time to continue to try it, because you're going to miss that ship. Retail has not been just sitting there twiddling their thumbs. They've been waiting for this opportunity. There's a stat that came out recently, and I'll ask you this last question when it comes to branding, and I know you got to get out of here, but over 650,000 cash out refinances occurred last year. Mortgage brokers only accounted for roughly 125,000 of them. And so that's all about the past client. That's all about just having a conversation. These were clients that had 3% that refinance. Over 500,000 of them did a loan with somebody in the retail space. And the biggest reason why was they picked up the phone and they called. A lot of them have the branding. And one of the things that I saw that you're doing for our community is mortgage matchup. And I believe what that does for us is that might not have a quick effect immediately, but it's the constant branding of people seeing that when they're attending these games, the younger fans that are coming in, the future homeowners that are coming in. How is that brand, and why is that so important and impactful, regardless of how large or small that your shop might be? Why does that play such a factor into the way you actually build your business?
Yeah, well, it's a big deal, because the thing is, the number one question I get when I go on television or I go speak at an event is, well, how do I find a mortgage broker? Because everything you just said makes sense. Brokers are faster, they're easier, they're cheaper. How do I find one? And it's mortgagematchup.com. And so how do we educate consumers and real estate agents that the best way to get a mortgage is through an independent mortgage broker? And so that's a big part of it. But then branding is a big thing, is because it doesn't happen overnight. It's not like all of a sudden I can say, oh, do this, and millions of people go there. But how do we get people to slowly but surely understand and see a consistent message out there? And by the way, it's a big deal whether you get a loan from it or not. We want everybody to know that the broker, because every loan that goes through a broker is a win for the community. That's why what you're doing at AIME is so amazing, is because like helping everybody out. Because if Jonathon has your company or Bill's company or Sarah's company or Jenny's company, whoever, everyone closing loans and doing a great job for consumers helps raise the profile of independent mortgage brokers. Years ago, 2008, 9, 10, you know what they did to us? They bashed us. They put the brokers down. They took everything from the brokers. They put us down as hard. And that's why we've fallen to where we were. And now we're climbing back up. We only can climb up as a community, as a team, as a family. And that's why it's great with you leading it, Jonathon, because you know the business, you're in the weeds, and you care. And we are going to rise up together. I'm going to do my part as the CEO of the largest wholesale lender. You got to do your part as the CEO of AIME, and then every LO that's watching got to do their part in each community, everywhere. Do a great job. Help other consumers. Help real estate agents. Educate people. Do a bang-up job every single time, and we all rise together. And that's why the mortgage brokers, by the way, last quarter, 26.6%, the highest reading since 2008, right? That's a big deal. That's like my only goal left right now, Jonathon, is how do we raise it? Like, that's all I focus on. And so we are going to do it together, but it starts with branding. It starts with dominating on a service, and it starts with community, a family community atmosphere. And you're doing a great job leading it. And I'm proud to be part of the team with all of you.
Thank you, sir, for everything. We appreciate the energy as always. I'm very excited. God willing, we can have more opportunities like this in the future. People love hearing from you alongside
Anytime.
Myself, especially just dominating and delivering all the positivity. And I'll leave you with this. I know there's some people watching right now that are still, glass half empty, and that's okay. We're going to continue to work on you because I believe the environment that we're building is all about helping you get into that winning mindset. We understand that your life doesn't always put you in that position, but we're here to help you get there. And for those of you that are thinking, well, the branding thing, how does that help me? I want you to understand this. These loans, these opportunities, when we grow market share, that gives companies like United Wholesale Mortgage more leverage when they're talking to Fannie Mae, more leverage when they're talking to Freddie Mac, because we have the market share. And so some of these things that are against us, for instance, the 1/8 surcharge, because we're TPO, that's the type of stuff we can start fighting for and getting back when this market share grows. So if you're looking at it half empty, start changing your mindset and think about the bigger picture and how it can truly help you and your consumers in the future. Thank you, Matt, for everything. Truly appreciate you, sir. Look forward to connecting with you in the future.
Thanks so much for having me. I appreciate you. Have a great day.
Take care. All right. Now, without further ado, we are going to bring to the table Amir Syed. And I just want you guys to see, this is what we're about. This is about winning. This is about a culture of collaboration. We're here to help you win. We're here to help you close more loans. And now, without further ado, thank God this guy is incredible on the phones because his technology went out on us earlier, Amir. But if you could bring him to the front of the screen here, I'd appreciate that. Amir, how you doing, sir?
I'm doing great, guys. It's good to be with you. Sorry about the Wi-Fi issues later, but life throws us curveballs and you got to know how to hit those, No,
man, listen, thank God I've been working on my improv skills. I was ready to go and transition out when I saw that tech failure. I did a couple of quick, sweats over here. But honestly, man, like I'm very happy to have you. I was a bit of a nut job, reaching out to you and getting in front of you. Bringing the heat. I think our first Zoom call, I had my tank top on, I should say, ready to show you the guns just so you can see the heat that's coming your way. But Amir, I don't want to take up a lot of your time. I want to keep you dialed in here. You have been delivering content like it's going out of style. I have been, mimicking. I've been watching. I have been just trying to learn as much as I can too from you as I embark on my journey as well. And it's just fascinating your mindset and how you approach agents and people and loan officers. You're just all about the fact that it's on you and nobody else but you. And you got to put in the work in order to find the value. And one of the things, one of the biggest things, you have this pinned, and this is why I wanted to talk about it, but you talked about cutting off an agent through Zillow. And you talked about how that exploded your business. And now, look at you now. And that was an opportunity that was missed by that agent because they didn't see the value in you. And we have a lot of newer, loan officers coming to the table, or some that entered the space during COVID. And so it's not the same. And what happens is you end up in these toxic relationships where you might still have co-marketing dollars, or you might have an agent that doesn't respect your boundaries. And I know you have all the steps, all the process in place to overcome this. Where do you start in that conversation? And why is it such an important one to have often?
Well, thank you for having me. Thank God for mortgage brokers. It's great hearing Mat Ishbia. We just had a billionaire on, and mortgage brokerage got my first start. The mortgage business saved my life. Sales saved my life. I dropped out of school. Mortgage brokers are a great gateway to hire people. And Matt literally took the words out of my mouth. In 2008, 9, 10, we were the scapegoat. They buried us, but they didn't know we were seeds, and they didn't think we'd grow back. And, and we're here. And I say we, I'm not even a mortgage broker, but I was a mortgage broker for 10 years. But at the end of the day, it's how I got my start. It's who I am, is at the end of the day, is a high entrepreneurship mortgage broker. So seeing Matt become a billionaire, seeing Barry, seeing you, like, I'm just honored to be here. And I think, my topic, and unfortunately I don't, my Wi-Fi didn't work, so I'm going to do a little hyper run for you guys here, is thank you for having me talk about this topic. So I have a post. If we're not connected on Facebook, y'all connect with me, Amir Syed. I pinned this post. It's gone like viral. It's how I fired an agent, right, over a $2,500 Zillow spend, and it went crazy because I knew that's what people are thinking. Part of me, I'm gonna say something really, really just hyper, just racy here. Part of me is happy this thing is happening to brokers. I think their egos got too big. I think they think they're better than loan officers, some of them. I think they think we're their ATM machines, right? And I think that they think that, you know, that like mortgage lenders at the end of the day were a commodity. Well, they're getting humbled now. They're going to have to work really hard. They're going to have to improve their negotiation skills. The ball is in our court now, right? Like we have never had better access to get to the consumer than now. We as mortgage lenders can go out there with the power of social, AKA business media, right? And take great care of our database because most realtors suck at database management. And that's why my next call after this, I got 2,000 LOs waiting for me to share with them how we're going to grow our database. So my thought on that, Jonathon, is in life, there's three types of people. There are takers, matchers, and givers. Okay, takers, they take everything. Sometimes they disguise themselves as givers. You have to be very good in understanding who are the true takers, right? Some people are matchers, quid pro quo. You do me, you give me a lead, I'll give you a lead, right? You have to find the ones that are true givers, right? But the givers have to be a little bit selfish and a little selfless. So what I mean by this is realtors, some of them are big takers, but I'll tell you what we're going to see on this other side of this storm is going to be one of the greatest runs we've ever seen. Okay. Like we are so blessed to be in this industry. We just had a billionaire on this call. Like the American home is the golden goose, right? Like this, we will always make money in this industry. And on the other side of this, lots of LOs going to leave the industry. So my challenge for you guys is never oversell a small audience. There are amazing realtors that are coming in the industry, right? There are amazing realtors that you will find loyalty with. So you will attract some bad realtors, some good realtors. But what I'll tell you is this is the great reset. If you can go out there and reset your mind and say, I'm going to have 1,000 realtors that see me online. I'm going to have 300 that know and like me. I'm going to have 50 that know, like, and trust me. You will spread and you will hedge your ability to be able to get more and more realtor relationships and know that some of them only want you for money. That's okay. But it won't sting as much if you have hundreds of more of them that are lined up. It stings a lot when you only have 5 realtors that you're trying to oversell and 3 of them actually want money from you. Not all realtors want money from you. Okay? There are a lot of good agents out there that you can start off and build relationships with now that are not doing a lot of business and they'll stay loyal to you. So my challenge off that, Jonathon, for the whole community here is 2 things. Number 1, we are so blessed to be in this industry right now. I promise you, this will not last long. If there's one thing I know 21 years of hustling is this too shall pass, right? This too shall pass, and whoever's standing, it's going to be the game of stamina. You're going to absolutely dominate. Number 2, Matt talked about mindset. I like mindset, mind share, market share. Your mindset right now is I got to go out there and I got to be everywhere. Look how you and I just met. I just got to speak after a billionaire just straight through my content. Number 2 is market share, right? Like we have to go out there and get a ton of people into our web. We got to be people gatherers right now. And lastly is the mind share, right, guys? Like we have to basically put ourselves out there through this power of social because I'm telling you, the consumer of the future is coming to you first, right? And so just remember, guys, when you meet people, be really smart and understand if they're takers, matchers, or givers, and surround yourself with nothing but givers and properly compartmentalize takers and matchers in the right shelf. You got to study people. Don't worry about the loan programs and the pricing and that stuff will find itself out. But if you can be a master people studier, you will get more loans than you can ever imagine.
You know, I love that. And I figured, so that's why your Wi-Fi went out. You wanted to go after Matt. All right. That makes a lot more sense. I'm just kidding with you. And you know, the last thing I want to ask you here, because I know you, you know, you had to get out by a certain time. So you talked about like, so for newer LOs, right? Or not even newer, let's just say those that have been struggling with facilitating agents. You talked about having basically this army, right? You want 100 of them, 100 opportunities to where, you have a chance. If you let somebody go, you have another chance to stay in front of somebody else. So without going into crazy detail, what are, call it 2 or 3 things somebody can do? They say, Amir, I don't know where to start. And you say, hey, listen, here's exactly what you do. Super easy, whether it's connecting on social media, whether it's going to an open house. What are 2 or 3 things that these LOs can do when it comes to finding that and building that army of 100 agents?
So great question. You have to, I want to remind everybody on this call, you are paid to go out there and procure and prospect new target accounts. Okay. That's what you're paid to do. People don't work with you because you're the best loan officer. I hate to break it to you. Okay. I know this because I funded multiple $100 million years and I don't have a college degree and English is my second language. I am not the best loan officer. I'm the best people officer. Okay. So I would literally pull out your phone book and I would go through the list of everybody there and say, hey, I haven't talked to you in a long time. I apologize for not keeping in touch. How are you doing? Call me when you get a chance. They call you, talk and say, I have a favor to ask you. When you're thinking about buying and selling real estate, who's your go-to realtor? Can I have his name and number? Then you're going to go to Facebook simultaneously. You're going to do an engagement post and say, I'm looking for your best go-to realtor. Drop his or her name below. Then you're going to call 40 of them that actually dropped their name. And then you reach out and introduce yourself. It's that simple.
But Amir, I'm nervous.
Well, this is the wrong profession for you.
There you go.
I want you to have service over nervous. I want you to approach things and I want you to be, I'm a service person and you are paid to prospect. If you are nervous, go be a loan underwriter. You're in the wrong profession.
Service over nervous. I knew I could throw anything your way and you'd give me some really good nugget there. Look, y'all, service over nervous. It doesn't matter if you've never done it before, if you don't like doing it, because there's somebody else out there that is going to do it. There just is. That's how this works. That's how it'll always work. So ask yourself, what LO do you want to be? The one that talks about it or the one that's truly about it? And I know what I want because, for me, when I get to my journey here and God willing, I get to look back at my life one day and I'm old and I'm sitting there and I'm looking at my kids, my grandkids, my great grandkids. They're going to ask me how great my life was. I'm never going to have to lie to them. So do yourself that favor and make sure you put yourself in a position to where you don't have to lie to them either about how great your life was because you attacked every single day with that much just tenacity. You have the opportunity to grow your business. You have to put in the work. Amir, thank you, sir. If you have any final thoughts or words for us, I'd be greatly appreciated. If not, I know you got to jump off.
No, I'll just say thank you, brother Jonathan. I love your energy. All the brokers out there that are watching this, I just want to tell you, we're so blessed to be in this industry. It could be a lot worse. I see middle class, lower class families really struggling right now. We're closing 3-4 loans a month, making 20,000. Let's just not forget, guys, where we all came from. Let's not forget how blessed we are to be in this industry. And there's an amazing opportunity on the other side of the storm. Just want you guys to just seek into gratitude. If you're alive and healthy and you're in this business closing a few loans a month, we're very blessed to be in this industry, guys. This is a great reset. We're all being humbled, but stay the course. This is a game of stamina. And I can't wait to meet all of you, hopefully in person one day.
Now, thank you, sir. I look forward to seeing you at AMCon. For those of you, Rene Rodriguez, appreciate you for everything, sir. Thanks, I'll see you there, brother. Take care.
I'll see you guys. Thank you for having me.
Of course. All right, Tom, if you want to bring back up Marc Summers over here, that'd be a big win. Marc, how are you, sir? So listen.
I'm great now. I'm great now. I mean, well, geez. Come on.
Listen, it's all about that, man. Like, Marc, this is what we're going to keep delivering for those of you watching. Yes, it's going to be recorded, but I want you guys to know the more we do these, right, the more we're gonna isolate them to registered people that sign up and join and go through that process, because we are delivering coaching, we are delivering big picture items, and so we're gonna bring these to you here just live the way we're doing it now, and just be ready to start registering for them where we have limited space, limited capacity. So Marc, do you have anything on your end? If not, I'm just gonna end it with a very quick story on my end here.
No, I mean, I don't have anything to add besides, I mean, you can see what AIME is doing now, and how we're going to push forward for this next possible boom, or even just how to continue to grow our business. And the one thing this has kind of been my motto, pretty much, John, ever since you came on board, which has been the most successful people that I'm even noticing even more now, especially when it's prevalent, is the fact that the most selfless people are the most successful people. You know what I mean? Like everyone that we spoke to, they're just selfless people and they just want to help. They look at the bigger picture and just try to get there instead of worrying about each single deal and each, this is what's going on, and blaming other people. So I love these things, and I'll kick it back to you, John. I love these things because I want to get off this for one reason. I want to go dive into my business. That's what I want to do. So I'll give it back to you. But no, thanks for having me today, and this was phenomenal.
Thank you for everything, sir. Thank you for your support as well as we continue to grow this. Kristen, to answer your question, that is a jellyfish lava lamp. Those are jellyfish in there. If you can't tell, I spent a lot of time on Pinterest trying to figure out how I wanted this set up. So that is exactly what that is. Very cheap on Amazon. I can send you the link if you're interested in it. So quick story for all of you. Just a quick story on mindset. It's actually about my dad. And so I'll make this short and sweet. Won't take up much more of your time here. Outside about 4 minutes. So my father moved to this country when he was 18 years old. My dad grew up in Jordan. He actually lived in Syria. And when he was very, very young, the government actually started going after my grandfather because he was selling newspapers and they thought he was a spy. And so what happened was my grandfather had to take his kids, my dad included, and they had to walk to Jordan. And my grandfather had to change our last name to Haddad when they moved to Jordan. And so when they were in Jordan, there was 4 of them, and they were very, very poor, literally grew up in a mud hut. In order to take a bath, they had to light up this massive container outside, and they had to light a fire underneath, and they had to make it boil just to kill any potential contamination. And that is how my dad, his siblings, his dad, my grandmother, that's how they literally took baths, took showers. That's how they did it. And it was very tough and rough for them growing up, not having a lot of money, very strict when it comes to schoolwork, and especially growing up back home in the Middle East during that time. A lot of what you end up doing is just working to take care of your family and get them, just make ends meet. The whole family has to work and figure it out. It's very difficult, especially growing up back in the day. Well, when my dad turned 18, my grandfather, who I never met, he passed away before I was born, he went to my dad and he said, "Here is all the money that I have. Go to America and figure it out." Those were literally his words to my dad as an 18-year-old. Didn't speak English and was told, "Please go and figure it out." And that's what my dad did. My dad took that money, was on a plane. When he landed in this country, he kissed the ground when he landed. He ended up going to Wayne State University for just a little bit of time. And he ended up living with his uncle. And that's how he started to learn English, because he had younger daughters, and the daughters taught my dad how to speak English. They're about 5 years old or so. And so my dad started learning how to speak English, started learning how to do everything. And he started that at 18 years old with a fresh start, not knowing anything about anything in America outside of what he potentially saw on TV. And even that was 20, 30 years later because of how they got television back there. My dad ended up finding a way to make it happen. And he brought his entire family from back home over to America. He got them all citizenships. He learned the language, and he's been here ever since. Never wants to go back home because of how traumatic it was for my father. So why do I tell you that story? I simply tell you that story because, like Amir Syed just said, he talked about making sure that you're focused on winning and not being nervous, even though you might not know how to do something. All of you have a similar story, or you know somebody with a similar story. You all have winners in your life. You all have people that when you see them, you love being around them because you just love their energy. It's that infectious. Well, why can't that person be you? That's who my dad was. That's who my dad still is. Thank God. And that's who I want to work on being every single day, is that infectious person. That doesn't mean I don't have bad days. What it does mean is I'm willing to do what many others aren't. And that's just the reality of success. It's simply the ability to stay consistent for long periods of time because many other people just tap out. So ask yourself, are you willing to do the things that make you uncomfortable in order for you to reap the benefits 5, 10, 15, 20 years from now? I know I will. I know I'll always do it because that is what is right. And that is the example I'm going to set for my children, my future grandchildren, and everybody else that's around me. Be the light, be the beacon, make that person you, be the person with infectious energy. There's no reason you can't. I appreciate you all very, very much. I look forward to bringing more of these alongside Marc and the entire AIME team. Huge shout out to our entire marketing team. Thank you guys for busting your ass behind the scenes, making this happen. Each and every single one of you played a major role in this, as well as the entire AIME community that we have behind the scenes. We are running lean and mean, and we're here to deliver you content, coaching, and transparency. I appreciate you all. We're here to help you close more loans. Take care. Have a beautiful day. Until next time.